And that is way too big. Let's go to, all right, let's do that. The numbers to watch this week. The U.S. Labor Department, the U.S. labor market is expected to remain center stage during a quiet week for economic releases, following a trove of recent data pointing to a slowdown. The Labor Department will report on new jobless claims after citing the most initial applications for unemployment insurance in almost a year last week. It was a rough news last week. The jobs report Friday greatly undershot expectations for new payrolls in July and posted the fourth consecutive month increases in the unemployment rate to 4.3%.
Congratulations, you played yourself.
It also raises concerns that the Federal Reserve may have missed an important opportunity to support employment. So what do we have for this week, right? Monday, the Institute of Supply Management released its monthly Purchasing Manager Index, which tracks if the non-manufacturing sector is expanding. It is an economic indicator for economic health. And we had Thursday, the U.S. Department of Labor releasing the initial jobless claims. All right, so let's go and take a look at this right here, our Bloomberg calendar, and we're going to filter out the countries to only have the US of A. And we're going to go look for employment. We're going to be looking for, let's look at all these actually. And we're going to go to here, apply. And all right, so we have our Purchasing Manager Index, and we have our initial jobless claims. All right, cool. So let's open this up and let's start off with this one, okay? So let me see if I have this one in here. Let me see. So let's go here. And the actual number is, all right, so what is the non-manufacturing PMI? All right, so let's do a quick lookup of what that actually is. So we're looking at the, what is the name of this thing again? Let's go to, let's get some understanding of what the Purchasing Manager Index is, PMI. So let me copy this into our Urban Dictionary of Economic Data. Let's go here and let's go to Purchasing Manager Index. And let's go there. All right, so the Purchasing Manager Index is, let's go here. All right, so the Purchasing Manager Index. It's like a report card for the economy. Imagine you have a friend who checks how well stores and factories are doing each month. They ask questions like, are you making more or fewer things this month? Are prices going up or down? Based on the answers they give a score from 0 to 100. If the score is above 50, it means the economy is growing, like getting a good grade. If the score is below 50, it means the economy might be slowing down, like getting a lower grade. So the PMI helps people understand if the economy is doing well or not. All right, so the score, the actual score is 51.4. So it looks like according to the PMI, we're doing a little bit better because previously it was 48.8. So let's take a look at the information that they have here. All right, so let's see, Institute for Supply Management. Let's go to our manufacturing PMI view report. Let's accept the cookies, agree. All right, cool. So wait, just 1 second here. What are we? Are we looking for manufacturing? Oh no, we're looking for purchasing. All right, so wait, non-manufacturing. So the manufacturing one is, so this is not the one we're looking for, but the manufacturing one is 46.8. We're looking for the non-manufacturing. So would that be services PMI? Let me see. Let's see. Non-manufacturing purchasing manager index, known as the ISM, reports on business and data. Let's see. Where is, let me check this one. Maybe it's services then. Let's check services. Okay, so this is service. So we're looking for service. All right, so let's take a read of what this actually is. So business activity index at 54.5, new orders index at 52.4, employment index at 51.8, 51.1, supplier deliveries at 47.6. So 51.4 is the services, which is now the non-manufacturing purchasing manager index. So let's take a quick read. So this is from Tempe, Arizona. Economic activity in the services sector expanded in July, a trend that has been interrupted only 3 times, though twice in the last 4 months. Since early in the vid, I'm not even going to say it, pandemic, says the nation's purchasing and supply executives in the latest services ISM report on business. The services PMI registered at 51.4, indicating sector expansion for the 47th time in 50 months. The report was, let me see if I can zoom in a little bit. Let's do that. Yeah. So the report was issued today by Steve Miller, CPSM-CSCP, chair of the Institute for Supply Management Services Business Survey Committee. In July, the services PMI registered at 51.4, 2.6 percentage points higher than June. So let's clap that up for that. I mean, that seems like good news. Higher than June's figure of 48.8%. The reading in July marked the 5th time the composite index has been in expansion territory in 2024. Before April, the services sector grew for 15 straight months following a services PMI reading of 49% in December 2022. The last contraction before that was in May of 2020, 45.4%. The business activity index registered at 54.5% in July, which is 4.9% points higher than the 49.6% recorded in June, and a return to expansion after 1 month of contraction. The new orders index expanded to 52.4% in July, 5.1 percentage points higher than June's figure of 47.3%. However, the index current reading is its 4th lowest since early in the pandemic. The employment index expanded for just the 2nd time in 2024. The reading of 51.1% is 5 percentage points increase compared to 46.1% recorded in June. So the supplier deliveries index registered at 47.6%, 4.6% lower than the 52.2% recorded in June. The index returned to contraction territory, indicating faster supply delivery performance in July after 2 months in slower territory. Supplier deliveries is the only ISM report on business that that is inverse. A reading above 50% indicates slower deliveries, which is typical as the economy improves and customers' demands increase. So, I mean, it looks like this one data point is reporting something good. It's how it's gonna go. Something's like some like when one thing contracts, something else might expand. All right, so let's see. The index price registered at the prices index registered at 57% in July, a 0.7 percentage point increase from June's reading of 56.3. The inventories index contracted for the 2nd consecutive month in July, registering 49.8%, an increase of 6.9% points from June's figure of 42.9%. The inventory sentiment index, 63.2%, down 0.9% points from June's reading of 64.1%, expanded for the 15th consecutive month. The backlog of order index returned to expansion territory for the 5th time in 2024, registering 50.6% in July, a 6.6 percentage point increase compared to the June reading of 44%. All right, let's go to, so 10 industries reported growth in July. The services PMI has expanded in 17 of the last 19 months, dating back to January 2023. And the July reading is only 0.9 percentage points lower than the average of 52.3% over that period of time. Also, the PMI has not recorded back-to-back months in contraction since April and May 2020, another indication of sustained growth for the sector. Miller continues. The increase in the composite index in July is a result of an average increase of 5 percentage points for the business activity, new orders, and employment indexes, offset by 4.6 points drop in the supplier deliveries index. The last time supplier deliveries was in contraction faster territory, while the other three indexes that registered expansion was in November 2023. Survey respondents again reported that increased costs are impacting their businesses, with generally positive commentary on business activity being flat or expanding gradually. Comments continue to express a wait-and-see attitude regarding the upcoming presidential election, with one respondent expressing concern over potential increase in tariffs. Look how they slyly sneak that in there. I got you. Many panelists noted a return to more stable supply chain performance, a bet with higher costs. All right, let me see. Let's go. Let me see. Anything in particular we want to look at over here? So, industry performance. The 10 service industries reporting growth in July listed in order are arts, entertainment and recreation. I mean, it is summertime, so that kind of makes sense. Accommodation and food services, mining, construction, management of companies and support services, transportation and warehousing, public administration, finance and insurance, healthcare and social assistance, and utilities. The 8 industries reporting a decrease in the month of July listed in order are agriculture, forestry, fishing and hunting, real estate, rental and leasing, wholesale trades, retail trade, professional, scientific, and technical services, information, educational services, and other services. So let's just like read 3 of these, right? And we'll take one from the top, one from the middle, and one from the bottom. As was the case in June, restaurant sales and traffic remained flat compared to last year. A heat wave in California, rising gas prices, and general angst about menu prices have tempered consumer demand. So that is definitely expected.
Congratulations, you played yourself.
Let's take one from the middle. Inflation markups have been issued from suppliers. That's from healthcare and social assistance. And let's take one from the bottom. High food costs are having an impact on customer demand and resulting in flat business overall. Business activity is stable. Supplier costs are flat in general. That is from wholesale trade. So so the top, the middle, and the bottom, they all are complaining about prices. Like, look at this one. High interest rates continue to affect long-term buying decisions. Let's see. While interest rates on home loans continue to change dramatically at times, the numbers of members requesting loans have remained relatively steady. So I mean, the number looks better, but what the respondents are saying is not the greatest news to hear. So it is what it is. It is what it is. That, my friends, is our purchase. What is the name of it? It's the services PMI. Services PMI. All right. So let's go back to full screen. I didn't slap the teacher. I should be able to go to the playground. Exactly, right? And let's see. Let's see. All right, let's go to let's go to all right, let's go to this. Let's look at this Department of Labor information real quick. We've been going on so many tangents today. It's crazy out here. But do me a favor before we get to the next data, like the video, share the video, subscribe to the channel, go to techcoachralph.dev, sign up for the Patreon free of charge, and you get access to our sprint reviews. If you want more information, you can sign up for a tier. If you want one-on-one coaching, sign up for a tech prodigy or a tech barbarian, and we will win together. All right. And before we go, let's we got one of my day oneers in the building. Lee Ann Williams says, I'm late. How is everyone doing? Shout out to you, Lee Ann. I am doing just well. Happy to have you here as always. One of my favorite people in the whole wide world. All right. So let's jump into this U.S. Department of Labor. So we are over here and we're going to go to here and let's see. So let's collapse this one and we're looking at the initial jobless claims. So what we see right here is that we went down from all right. So previous 250, forecast 241. We went down to 233K. So we actually hit 233K, but that is this week. Let's wait till the numbers get revised next week. So let's see. So let's, how do I get rid of this thing? Let me see. All right, cool. Let's zoom in. So unemployment insurance. So what is this report? So this report is pretty much saying people who are filing for unemployment for the first time. So that means they just recently got laid off or they just recently filed for unemployment. And so it's a weekly report and it's pretty much people who are asking the government for help for the very, very first time. All right. So let's see. In the week ending of August 3rd, the advanced figure for seasonally adjusted initial claims was 233,000, a decrease of 17,000 from the previous week's revised levels. The previous week's revised levels, the previous week was revised up by 1,000 from 249,000 to 250,000. The 4-week moving average is 240,750, an increase of 2,500 from the previous week's revised average. A previous week's average was revised up to 250 from 238,000 to 250. So it was revised up from and they were expecting it to be like 241, but it is only 233,000 people filing for help for the first time last week. Bruh. The advanced seasonally adjusted insured unemployment rate was 1.2% for the week ending of July 27th, the unchanged from the previous week's unrevised rate. The advanced number for seasonally adjusted insured unemployment during the week ending of July 27th was 1,875,000, an increase of 6,000 from the previous week's revised levels. Some water. Let's see. This is the highest level for insured unemployment since November 27th, 2021, when it was 1,878,000. The previous week's level was revised down by 8,000 from 1,877,000 to 1,869,000. The 4-week moving average was 1,862,000, an increase of 7,000 from the previous week's revised average. This is the highest level for the average since November 27, 2021, when it was 1,928,000. The previous week's average was revised down by 2,000 from 1,857,000 to 1,855,000. So this is the averages and the percentages for the seasonally adjusted insured unemployment. So unadjusted data. The The advanced number of actual initial claims under the state program unadjusted totaled 203,054. In the week ending August, a decrease of 13,589 or 6.3 or negative 6.3% from the previous week. The seasonal factors had expected an increase of 1,251 from the previous week. There were 277,917 initial claims in the comparable week in 2023. So that number looks a little bit better until it's revised next week. The average unadjusted insured unemployment rate was 1.3% during the week ending of July 27th, unchanged from the prior week. The advanced unadjusted level of insured unemployment in state programs totaled 1,910,894, a decrease of 23,512 from the preceding week. The seasonal factors had expected a decrease of 29,904 or negative 1.5% from the previous week. A year earlier, the rate was 1.2 and the volume was 1,809,776. All right. So let's take a look at. I like to read this one. Initial claims for UI benefits filed by former federal civilian employees totaled 312 in the week ending of July 27th, a decrease of 75 from the prior week. There were 391 initial claims filed by newly discharged veterans, an increase of 16 from the previous week. There were 4,769 continued weeks claimed filed by former federal civilian employees. The week ending July 20th, an increase of 110 from the previous week. Newly discharged veterans claiming benefits totaled 4,521, a decrease of 35 from the prior week. Right, and the highest insured unemployment rates in the week ending of July 20th were in New Jersey, always taking the lead at 2.8, Rhode Island at 2.6, Puerto Rico at 2.4, California at 2.3.
Money.
What? Shout out to Ferris for the $20 super chat. I'm going to read it in just a second as soon as we're done with this, but shout out to you, Ferris. I truly, truly appreciate you.
I appreciate you.
All right, so we got Minnesota at 2, Pennsylvania at 1.9, Connecticut at 1.8, Illinois at 1.7, Massachusetts, New York, and Washington at 1.7. The largest increase in initial claims week ending in July 27th were in Michigan with 4,027. Shout out to Michigan out there. Missouri at 3,410, Massachusetts at 2,127, Virginia at 637, and Minnesota at 487, while the largest decreases were in Texas. Shout out to the Lone Star State, negative 6,607, New York at negative 2,396, Ohio with negative 2,377, Florida, shout out to Florida, and our alligator throwing through drive-thrus at negative 1,587, and Tennessee with negative 1,488. So that is our weekly jobless claims review. So clap it up for that. And Ferris with the $20 super chat. He says, "Rise up." Yes, let's rise up. Let's rise up. Let's get it.
Let's get it.
That's what I'm talking about. Thank you so much, Ferris. You are very, very much appreciated. And we got